Hello, and welcome to my channel, The Entrepreneurial Mindset. My name is Jay Berman, and today's presentation is the 10 major sales barriers. So when we talk about making a sale, it's probably the most difficult part about starting a business. So let's say, for example, you're a new entrepreneur, you've created this great good or service, you have your own website, you're doing some advertising, and no one's buying. Okay, major problem. And there are 10 reasons why people may not buy from you. There's a concept called buyer's resistance or buyer's reluctance. And it's not that they don't like your product, they don't know who you are. So there are 10 legitimate barriers to making a purchase, to actually selling a product to another person. It's a lot more complex and a lot more complicated than people realize. So the first one I'm going to talk about is no dissatisfaction. So what does that mean? The buyers or your prospects are basically content. They're happy with the current choice of good or service. They see no reason to switch or to change to a new product that they've never heard of. So you have to kind of give them a reason for their dissatisfaction. So offer a better good or service, maybe by the way the product is designed, maybe it's the quality, maybe it's the durability, maybe the price, maybe ease of use, availability. There are a whole bunch of factors that go into creating dissatisfaction. I have a separate video on a better marketing strategy that might give you more ideas on how you can convey that you offer a better good or service than what they're currently using. So again, unless someone is dissatisfied, you're dead in the water. Now, the other 9 sales barriers don't necessarily occur in a particular order. So the second one that I kind of discovered was no brand. You know, the buyer has never heard of you. They have no knowledge of your brand. And this is where older brands, more established brands, do have a competitive advantage because they have a history of being reliable. If you think about the products that you use, how long has the company been in existence? My bank's been around since 1850. My life insurance company's been around almost 180 years. The detergent my family uses was created in 1959. The hotels we stay at, the company was founded in the 1950s. So there's a certain advantage for companies that have been around for a long time. They tend to have a competitive advantage in terms of market dominance. They dominate their markets because they have been around for so long. So one way to overcome that barrier of no brand, of people not having a knowledge of your goods or services, is that you have to do advertising, which I call customer education. In other words, you really need to teach your buyers, your prospects, why your good or service is better. So let's move on to barrier number 3, no priority. In other words, no perceived problem. So the buyer does not see a serious concern becoming a problem. All right, so they may be concerned about their current goods or services, but they don't really see it much of a problem, okay? You have to kind of create a concern. You then have to, that concern has to be then become a problem, and then that problem has to become a priority for it to be solved, okay? So in other words, no priority, no problem. No problem, no priority. So what are people's priorities? it basically boils down to economics. People are concerned about their jobs, the cost of housing, food, their car, health, um, buying clothes, shoes, buying things for the kids' activities, their pets. So people prioritize their spending. And you think about it, that pretty much covers 90% of somebody's salary is their housing, their food, their car, their health costs, taking care of their kids. Even pets can be expensive. So, how much disposable income do people really have beyond the priorities in terms of economics? So if it becomes a severe problem, then it's something that is going to be a priority of their spending. Now we're up to barrier number 4, which I define as no trust. The buyer does not trust the seller's competence to deliver on his or her promises. Because if you think about it, when we buy goods or services, we're really buying the seller's promises that the product's going to be reliable, that it's going to work as advertised. So you have to create a sense that as the seller, as the entrepreneur, that you're competent in delivering your products, your good or services promises. Okay, so if they don't know you haven't been able to demonstrate whether you can be reliable, that you can deliver on your promises. So you have to create a sense of competency. And how do you do that? Well, you have to kind of demonstrate or convey your expertise, either through your credentials, like a degree or training, your experience, and also testimonials from customers and perhaps industry experts who have tested your products or have tried your products, have bought your products. And to them, you've demonstrated your competence to deliver on promises. So they're kind of like your witnesses that, yes, this is a better product that you're offering. Barrier number 5 is no interest. We have 2 interests, what we want and what we need. And perhaps you fail to explain the better benefits of your good and service. And a great way to overcome no interest is how do you get their interest is by offering them maybe a free sample, which may be hard to do if you're selling it through the internet. But if you have, like, for example, a food product, maybe join a local farmer's market so people can come in and get free samples, or perhaps offer a free trial period for your good and service, something to give people a low risk way of trying your products, and you demonstrating that you have the competence to deliver your promises on your good and service. And then now we're on to barrier number 6, which I define as no excitement. The good and service does not excite the prospect enough to purchase a good or service. So we have to realize that buying goods and services is not necessarily a completely rational, intellectual, non-emotional purchase. We buy things because we get excited about them, particularly like clothes, or maybe buying a car, going on vacation, staying in a particular hotel. There's a lot of emotion in terms when we buy our goods and services that we kind of forget because we think, taking out our credit card and we're making a purchase and that, it's completely rational, completely non-emotional. And that's not necessarily true. So what you have to do is you have to create desire. So you do that by using visual aids, your advertising, for example, videos, where you're demonstrating how the good or service is better than current options. Maybe have interviews with customers, experts that have purchased your good and service, and they're excited when they can explain why this good or service excites them when they purchase. Barrier number 7 is no value. So the good and service must benefit prospects by increasing their well-being, by increasing their happiness. If you think about it, all purchases are bets. There's a certain amount of risk when you buy a good or service, and it just may not work out. And you buy. My wife and I bought a TV a few months ago, and it only lasted 2 months. We ended up not buying that brand anymore because it was unreliable. Fortunately, we got our money back, but it was a risk. Anytime you buy something, it's always a risk that you're going to lose your money. The prospect doesn't view the good service as a good investment, a good risk, a good bet. So you want to be able to demonstrate to your prospects, your buyers, that they're always going to win when they use your good service. They're never going to be disappointed, which goes back, of course, to barrier number 1, dissatisfaction. So you want to prevent disappointment. Now up to barrier number 8. Now we have to talk about money. So money is not necessarily the first barrier. It could be the first, it could be the last. I mean, it's usually not the first. Usually, again, you have to start off with dissatisfaction. But a lot of times, people are researching their choices, and so money, it's kind of a touchy subject because, again, going back to barrier number 7, they can lose their money if the product doesn't work out. So perhaps the buyer doesn't have the money to purchase your good or service. Like I mentioned, it's just not a priority. It's not in their budget. Every family, every person has a budget, depending on how much income they have, how much money they have in the bank. And just recognize that these days people are very strapped for cash. And what you have to do is, in order to overcome the barrier of money, is to offer discounts, perhaps do this buy now, pay later. I know if you've noticed on a lot of websites, particularly clothing websites, you can buy something for like $100 and you have like 4 months to pay it off. They have those type of services. I see that more and more, particularly when it comes to online purchases. Financing, loans, which of course is very dependent on your credit score. So, if you're going to buy a house or a car, they have, loans are a very important part of the purchase, or maybe leasing, if you can lease a car. Payment plans, layaway for a special occasion. A lot of stores, have like layaway plans for like special occasions like Christmas or birthdays or Mother's Day, Father's Day. Those type of holidays, anniversaries. So there are multiple ways that companies try to make things more affordable for people, particularly if they don't have the cash right up front. Now you're up to barrier number 9, and all of a sudden people say, well, I'm not in any hurry. So people have no sense of urgency to purchase the good or service right away, okay? Because there's all these other barriers that are taking place before this one. So you have to kind of create a sense of urgency. And the way you do that is by limiting the time availability, the price, and the product to purchase. So for example, you maybe offer a discount or a sales price during a specific time frame. Mother's Day is coming up in the next couple of weeks. Maybe you can do something like, offer like 20% off if they buy by, May 11th, because it's Mother's Day. So in other words, you want to create a scarcity of time, particularly if you think about like Christmas, right? All the stores are going to say, Christmas is coming up, make your purchases now, put it on layaway, make your payments now, because we know Christmas is a very important holiday for everybody, and particularly for the stores. This is where they, the whole concept of Black Friday. So retail stores make their profits, or they at least hope to make their profits between Thanksgiving and Christmas. It's only 1 month. So again, they try to limit your time, on sales, purchase in 3 days, and get 25% off or 50% off, or whatever the deal is. So that again, they use the scarcity of time, the scarcity of availability, to create a sense of urgency for you to make the purchase a priority now. And then the last one is no commitment. The seller fails to gain the buyer's long-term commitment. Okay. So as a new entrepreneur, you're always looking for loyal customers, and loyal customers are your long-term customers, your long-term purchases. And how do companies get people to commit to a particular good or service? One way, of course, is by credit card. All the hotels usually require a credit card to guarantee the room, because if you don't show up and don't cancel within a 24 or 48-hour period, they're going to charge a credit card. Okay, and they want to make sure that the room is sold. Down payments, particularly, let's say, for cars or for a house. You might have to sign a contract, a loan agreement. And then auto pay is a great way to get customers to provide a long-term commitment, either by annual or monthly payments, or perhaps you offer subscription discounts. In other words, in order to encourage frequent purchases, particularly monthly purchases, a lot of companies now have offer subscription discounts, particularly for food items, or prepared foods. You can buy, a certain amount of meat or fish or prepared meals on a monthly basis, and it's the food is sent to you every month. So that's what we call a subscription discounts. And that's my discussion regarding the 10 sales barriers. I hope this was helpful in explaining the complexity and the complications involved in making a sale. It's probably the most difficult part of being an entrepreneur, is getting people to give you their money, and I hopefully give you some strategies on how to overcome those barriers. If you have any questions or comments, use the comments section. Subscribe to my channel for more entrepreneurial content about entrepreneurship, and thank you very much for watching. Okay.